Oh, say, can you see by the dawn's early light what so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight o'er the ramparts we watched were so gallantly streaming, and the rugged red land, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say, does that star-spangled banner yet wave o'er the land of the free and the home of the
Good morning. Got a couple notes. Okay, just want to make sure I've got my stuff ready to go. All right, very good morning to you on this October 30th, 2025. This is World HD. Live each weekday, 8 a.m. Eastern Time, streaming live on X, Rumble, and YouTube. When we don't get kicked off of YouTube, mostly right now it's just copyright infringement. I don't think we're saying anything that's going to get us kicked off there quite yet. But anyway, you never know when that can happen, though. So today is Equity Thursday, where we want to really look at the equity markets. We've been tracking these things pretty closely for quite some time now. We've had, a big harmonic structure in it. It came all the way back from, I think, the end of May. And then that got hit, the 65.74 in the S&P, the 24 125. I can't remember the exact number in the NASDAQ. So those were two big targets for us. They got hit. We're on the upside of both of those. So, generally speaking, the trend is up. And we have to accept that for the idea that maybe this Dow can make a run into the end of the year. Maybe the S&P, the NASDAQ can as well. However, we're starting to see some issues with the AI and the big tech. We saw that come through in the earnings last night. Alphabet was up, Microsoft was down, and Meta, Facebook, Zuckerberg, it got hammered pretty good. And the reason for that is that they're spending a lot of money on this AI, and they're really not being very transparent on how they're going to generate the revenues that are going to account for all this money being spent. So I think last quarter the Mag 7 spent like $78 billion just the last quarter, mostly led by these three, the Microsoft, Google, and Meta. And the revenue stream just doesn't look all that great, especially for Meta. Now, Microsoft looks pretty good, and I think also with Google, it looks fairly good, right? They're finding ways to make this work. Now, the question is why, right? Why would they do this? Now, we saw Meta spend a ton of money to acquire talent. Okay, they had fallen behind on this AI front. We knew that. And then they were spending hundreds of millions of dollars. Zuckerberg was entertaining people from other companies, that other AI developers. He was entertaining them a few months back, hundreds of millions of dollars in pay. One, I even heard potentially $1 billion, right? $1 billion pay package right out of the gate to come and help develop this. So Meta knows that this is this go for broke mentality. Okay. And so, this is what we're watching is we know that this AI is look, this stuff is for real. When you ask it a question, last night I kind of got into I was asking some questions, and I thought, I know what it was. I was watching Robert Barnes, and he was talking about Marco Rubio having a background, his family having a background in narcotics. And so I started asking the question, to Chat GPT and a couple others, and it said, no, nothing there. And I thought, Robert Barnes wouldn't say this without knowing something. So then I challenged it, and it was actually pretty amazing how it came back. It said, oh, I appreciate your challenge. Here's what we found. So his brother-in-law was actually running a narcotics ring, cocaine ring, out of a house in Miami, Rubio's. I think it was his oldest sister's husband, was running a narcotics ring, cocaine and some other things, out of a home in Miami. And then Rubio and his parents lived in that house temporarily. So then, so it comes back and so I said, well, now what do you think about that, Chat GPT? How do you, somehow I found it through another one. And I kind of got in I don't know, going after it a little bit. And it came back and it said, okay, yeah, you're right. That did happen. I said, don't you think that, I said, let me give you an example, Chat GPT. On Wall Street, a lot of times these Wall Street firms they'll make billions of dollars, and then they're okay paying tens of millions of dollars in fines. And then what they do is they post up one person as the fall guy. And so somebody takes the hit, and all the people who took all the money, they don't take a hit at all. Okay. They just put someone up as a shield fall guy, probably give them a payoff somewhere down the road or something, or maybe they don't. And I said, don't you think that something like that could be happening here with Rubio, where the family was involved? They did receive some sort of pay or something out of this. And, finally it came back, and it came back with more information. So you have to press these things. It's pretty amazing how and I guess you have to derive, how can it know what you're thinking unless you go after it? So I guess, to be fair, but the point is, unless you ask questions, unless you keep asking questions, it doesn't deliver the information. It's all, the output is only as good as the input. And it seemed at this point in time anyway, okay, at least where we're at now, it seems to actually accommodate, or I don't know if the word is enjoy, because I'm not sure there's any enjoyment out of a bunch of zeros and ones and large language models, but it seems to show signs of it portrays that it has interest in what your question. Um, and that may change. That can change very quickly. They can adjust that algorithm very quickly, where it's like, basically, we've just sent this request is not this doesn't fit within the guidelines of whatever, these rules, and therefore we've just submitted your information to the local police, and that kind of a thing. So it could go very quickly from, oh, wow, thank you for the questioning and challenging me, to, we've just now reported you to your local police, and or to the local FBI agent or whatever. So anyway, but I guess my point in giving that little description is that this stuff is for real. This is a incredible technology that's able to take things from this massive database of language that we put out there, whether it's written, spoken, you know, however, even data that, and I was talking with Rachel Hawk about this, how Microsoft has been forcing people to put things on their cloud. Okay, and we see the cloud revenues coming through. Okay, so I should have grabbed the chart. I saw the chart this morning on it. Their revenues, they're not staggering, but they're steady. I mean, it's a steady climb in their cloud service, cloud AI, cloud, everything cloud. Why is that? Because they want to get all of our stuff on there. One, so that we pay more. Okay, we expand the size of what we're paying for. So 5 gigabytes, 50 gigabytes, 500 gigabytes, terabytes, whatever it may be. So they're getting more money from that, but they're also probably, I can't see why they're not, because somewhere in there, we probably, when we sign up for whatever, whatever the Microsoft service is, whether it's Office 365 or whether it's, SQL Server, or whether it's just their cloud, somewhere in there, we've hit a button and we've accepted their terms. And so therefore, they probably have the right in this click wrap agreement to go in there and extract our data and probably comb through it and put that in their large language models. Okay, so it's a combination of revenues and also stealing our information. And I'm sure we've given them the right. Even though we probably don't know it, we've probably authorized them to access anything that sits in the cloud for whatever purpose. I'm sure it's worded very crafty from a set of attorneys. Well, this is only for, whatever purposes. I'm sure it's crafted very. That's what I think is going on. So this AI stuff is I mean, it really is it is pretty impressive. And in the hands of the right people, I think it's a great tool. Problem is these things tend to not get left in the hands of the right people and they become weaponized, right? In one form or another. Unless the people wake up and realize that, this is a very powerful tool, but it's also a very dangerous tool, especially when we realize like what's happened with Operation Mockingbird and all these different things throughout the last 60 to 80 years, really coming out of World War II, that we've been propagandized so much. Okay. And so this could be even a more effective propagandization tool. Okay. So that's what we have to be aware of. So earnings are out on that stuff. We'll cover that a little bit today. And then what I want to get into is if we didn't say it, government shutdown day 30. All right. It mimics the day of the month. So, in a day or two, we're going to have to actually think again, 30, 35, when we're on November 3rd or 4th or whatever it is. But right now it matches the day of the month. And, this is going to probably become front and center now. Now that President Trump is done with this Asian tour, okay, wrapped it up yesterday with President Xi. And we're going to get into that today too. I want to go through some oddball things. One, I think it was not a very transparent meeting, and I'll show you that, right? We're going to show the clip of him getting there, the formal handshake, sitting at the table, the leaving handshake, and then getting on the plane. And it was very quiet. I think it was supposed to last 3 hours is what it was scheduled for. And this was in Busan, South Korea. So again, President Trump was in South Korea yesterday for a dinner with a lot of the government officials in that whole, at this summit, APEC, ASEAN summit, this whole conglomerate, including, people like Mark Carney who showed up there to have dinner with President Trump. And how that deal, we may or may not talk about that. That'll come up again, I'm sure, at some point. But it just didn't feel very, it didn't feel like President Trump came out with and I'll show you this. He came out with a long statement going through different things, and there's just some weird things in there. And when you see what your vibe is when we run these clips today, if you feel like this is something, I'll just give it away. I think this was just a temporary, I think these two countries know that war is coming, okay? And there's going to be a battle over Taiwan. Okay, there's going to be a battle over this Asian region because Asia is the other center of the world now. The U.S. is the center of the West, and this China and Singapore and a few of these other regions, main centers in the Asian region, are the center of Asia. So these are the two big hubs right now, I think, in the world, and there's going to come a head-to-head match at some point. I don't know what it's going to look like. Could be physical, could be drones, could be missiles, could be who knows. But you can almost feel the tension between these two. It's not like it was under Trump 1.0. And we're still playing the same old game. Oh, yeah, we're going to do soybeans. Oh, yeah, we're going to stop the fentanyl. Oh, yeah, we're going to, do this. Now, the AI is a new thing. And that didn't even come up, which is even weird, which is even more strange, is that the Blackwell chips didn't even come up in the discussions. That was supposed to be one of the top things, and it didn't even apparently they didn't even talk about that. At least that's the word we're getting. Who knows? Maybe more will trickle out on that. But so far, that's the case. Okay, so a lot of things to get through today. Let's go ahead and one of the things too I just wanted to comment on was yesterday. Oz, Villa, and Trumpet had a little discussion at the end of the show about how to support World HD, and I appreciate that. I think the biggest thing is so far, obviously since not being on LFA and essentially starting from ground zero again, I think that this show is, for me, the show is about learning for me too. Okay. One, it's a connection with you guys and trying to share information to people who care. Okay. I think that's the number one thing. And then but it's not where I really would like it to be. I would really like this to be where, it's a 45-minute to a 1-hour show that covers top headlines very efficiently and covers a little bit on the charts, throws out a few ideas, okay, but it's a comprehensive, self-contained little show. And then back to the community that we built. I haven't done much with that just because so busy, but and just getting more and more efficiency. There's a lot of things going on. I mean, I trade probably, I don't know, 14 hours a day, 16. I mean, I'm always have trades on, so I'm always monitoring things. So I guess you could say 24/5, 5 days, 24 hours a day, even though I do sleep 4 or 5 hours a night most nights, 3 to 5, somewhere in there. But so I'm always trading and just trying to find ways to, one, help have this show, doing this show, help people, but also help me do things that I wouldn't normally do, right? Force myself to find efficiencies. So that's a lot of what, this is about. Helping people, but also, and I think just trying to create a community of people who actually care about this stuff. And I think finance is the center of capitalism, right? This is the Western economy. And the Eastern economy does things a little different. The Middle Eastern economy does things a little different, and the Western economy does things a little different. And I think those are the three ways to look at it. And if you think that our way of doing it is right and that it's going to survive over time, then I think this is a very important place to spend time, right? Is on the financial side of things and investing in things, right? Investment and stuff. I mean, we're supposed to invest in things. Someone has a good idea, we should invest in it. It's been distorted clearly because, this AI stuff is just, whether or not the technology's out of control, the process has gotten out of control, right? You got the private equity, you've got the private credit, you've got public equity, you've got public debt. The problem is whoever they is, right? This ubiquitous they, the technocrats, the globalists, whatever, they are very good at moving things from private to public regularly for their advantage, okay? And so that's what we need to be educated on, is not allowing that to happen, right? And so these are tall orders, okay? People have been fighting this stuff for a long time and they've been pushing. So it's been this constant tug of war, push and pull. But I think that's really what we're trying to get to here. So hopefully that makes some sense, all right? And so for now, the best way to support this is, first thing is show up. 2, find ways to benefit from it. Okay. 3, hopefully take back some of your own assets from asset managers not acting on the behalf of we the people, because we're funding these things to go on. We're funding this, whether this AI is good or bad, we're funding it one way or another, okay? Directly or indirectly, small or large, in some way or shape or form, right? We fund this stuff, okay? And we allow it to go on. Okay, so being aware of that. And then the other thing is to share it, right? If you think of anyone that might be interested, even for a few minutes, if you're like, hey, watch this part of the show or something like that. Because I know not everyone can watch an hour and a half show. And that's why I really want to get to these shorter segments where, we do this show and then get to these, where I cover the global markets, 5 or 6 markets that are actionable things. It's like, okay, this thing's at a low risk spot. Here's where we manage the risk. Here's the target. Here's the idea. You can do it through options. You can do it through this ETF. You can do it through this, right? Then we do the US market, break it down into sectors, okay? And we break it down into sub-industries and these different things. And we find things that are moving, right? And we did a little bit of that before. And I've kind of gotten away from it just because it requires, you think you can do it, and then you realize it requires a little more dedication and a little bit more, sometimes do it and then step back a little bit, think about it, and then find ways to do this in a better way, okay? So Jay White's going to help me with some of that stuff. He's got a background in computers and controls, and so he gets a lot of this stuff. And so it's just we're close to getting to that point where we can start making progress on that. So he's going to help on that. So again, it's kind of a community that's building, right? People helping me, hopefully I'm helping other people, and that we're going to make this thing better and better over time. So right now, there's really not a product to support or invest in. Hopefully there will be in the near future. And when that happens, hopefully it will come through the community, right? Because that's the thing. Because ultimately, here's the thing, right? When you're in the hedge fund space and you're managing money for other people, you have to go through this whole deal, right? It's like you have to get attorneys to draft documents, to get private placement memorandums. Then you have to find people that are qualified eligible participants. And then you have to bring them in. If you're going to do the futures side of the markets like I do, futures and Forex, and you don't want to go true hedge fund where you're also on the security side, because you've got futures and then you've got securities, right? And they're on 2 different sides. The CFTC governs one, the Securities Exchange Commission governs the other. And if you're only going to stay on the futures side of things, then you have to bring people in through what's called a commodity trading advisor. So then you have to manage their account individually. And then over time, after you've known them for a certain period of time, then you can bring them into a commodity pool, right? Which is kind of like a hedge fund. But you have to have a relationship. This is, again, people probably don't follow this, but this is the way that it's supposed to work. And it's nothing but a big headache. And the whole thing is, it's like a QEP, or a qualified eligible participant, has to have this amount of income, single or married, and they have to have, or this amount of wealth, or this and this and that. I would rather flip that thing upside down and say, anybody that joins this community can't have an income above this, or can't have a joint income, or can't have a net worth above this, right? Because that's the problem. You know what I mean? That's how you get more haves and versus have-nots, and so ultimately the goal of all this work that I've done, with the harmonics and these other things, is to find a way, and it's not an easy thing, and it's a process. I mean, I've been working on a model. We're getting really close to being done with it. It's a model that helps support my trading, but it's something that can be rolled over to the equity side of things, to all these other markets. Right now, it's only going to be focused on about 30 to 70 markets. Okay. Once I get that done, then my goal, and I prove it out, right, and make little tweaks to it, then my goal is to try to, connect that to the harmonics and find a way to deliver that to people on, in a broader scale. In the meantime, I have to be the bridge that bridges that stuff until we can automate this stuff. So the goal is to ultimately get a show that's, pretty tight, and maybe I don't even do the whole show at that point. Maybe someone else is doing the news, and then I just do some analysis or something like that. Who knows? We'll see where things lead to. But ultimately, the goal is to get it in the short format where people who are busy can watch a 10-minute segment, okay, and they can benefit from it. And that makes it easy for people to share. Say, hey, check out this segment. And, there's all kinds of things that go into this. How do you do that without, there are a lot of things you have to think your way through. But it can be done, okay? It takes time. And so right now I'm in this formation process again and the whole thing that happened with the LFA is probably good, look, I'm not going to go into that. The point is, it forces me to think about some stuff again, right? And why I'm doing this, and that, the 15, 20, 25, 30, people that join in Rumble, the 15 to 30 to 50, 100, who knows? It fluctuates, that join on X, and the almost nobody who joins on YouTube, which again, they'll join on YouTube if you advertise. So there's a lot of things you have to think through, like, okay, where do we really want to put our focus to get this out? But you guys are the ones right now that can share this. And I guess that's the biggest thing you can do, right, to support the show, is to just share it. Okay. And I think that's everything, right? So I just wanted to go, and I appreciate the comments. It's heartfelt, right? When I see people putting that in there, how do I support this? One, that I appreciate that, because I just appreciate that, right? I don't know how to say it other than I just appreciate that. So that is really nice, very kind. But right now, there's really not a need to do that. In time, it would be great if people could support the community and share and spread that word. That will be the great thing, but it's not ready yet, so I don't want to try to promote something that isn't quite ready. And I'm dealing with, some things with a programmer whose health isn't great, and we're trying to get this project done before, something potentially happens to him, or he has to go through more treatments and so forth. So that's taken a big part of my focus. Is to get that done, because, like I said, we're very connected in working on this thing over the last 15 years, and I really need to get this thing done for him, for me, for everybody, and to transfer this stuff. So hopefully that makes some sense. I appreciate that, and I just wanted to give you a perspective on where I'm at. Okay, so let's go ahead and jump in and look at this economic data. Let's see here. I think we're good to go. There we go. Okay. And fade that over. All right, here we go. Okay. So this was the week. Again, the big thing of this week was all the central bank meetings. Canada kicked off yesterday in the morning. They cut rates. The U.S. Cut rates 25 basis points. Japan held rates. Remember, Japan was in a raising rate cycle. And they've held rates now 6 times, I think it is, okay, in this cycle. So they started raising rates. Things got, the the markets got a little excited in Japan. People started putting resources back into Japan. Trading desks started to be revitalized. They started getting active again. And now Japan's been on hold for 6 straight times that they could have continued to raise rates, but they haven't. It's because they're going against the grain. All right. So again, it's not like Japan hasn't gone against the grain. Ever since the late 1980s, Japan kind of went against the grain with lowering interest rates, while the rest of the world was going up and down different times through different cycles. But Japan was consistently cutting rates to the point where it got so negative that, again, that's what really created that carry trade, okay, that we've talked a little about. Borrowing money in Japan, going someplace else, and getting a higher yield for it, right? And that's what a lot of these hedge funds did, was doing that kind of a thing, all right, this carry trade. All right. Then today we get the European Central Bank is going to have a rate announcement. So that's 4 of them in 24 hours. And they're probably not going to do anything. Okay. I wouldn't expect them to do anything. It's Christine Lagarde, heads of European Central Bank. But I do think that they'll give a hint at doing something. Why is that? Because Germany's weak, France is weak, and the periphery of those big northern European economies are weak. The southern economies are actually doing a little bit better. Italy seems to be hanging in there quite well. Again, Italy's being led by Meloni. She's definitely more of a conservative leaning, and she's been a little bit more fiscally responsible, I think, than the others. And so I think it's starting to pay off a little bit for Italy. All right, so this is a role reversal from, pre-2008, before the real estate crisis, before the blow up that occurred in Greece. This is a role reversal. The South is actually potentially holding ground better than the North, okay? And so this could create that fracture of the European Union, okay, in this euro currency. Okay, and I think that pretty much gets it. We've got a little bit of stuff out of today. U.S. advanced GDP on expected at 3%. Remember, this is what Scott Bessent and President Trump were saying, that they could achieve this 3% target on the GDP. Can they hold this? They got a 3.8 last time, I think, that this was announced, and 3.8%. So definitely above expectations. The media gives them almost no credit for this. Can they consistently hold this? Because that's one of the things definitely going in our favor. And that's the recipient of all this foreign direct investment. It's the GDP will, it's a catch-all. And it doesn't tell you necessarily the health of everything, but it tells you, of course, the overall health. Is the U.S. growing? Where is it growing is the key. Then we want to look below the surface and say, okay, if it's growing overall, what's weakening and what's growing? And is this good, right? Looking underneath things. But the big number is something that the media should get behind. If they really cared about this country and the success of this country, it's a perfect number. If we exceed this 3% today, that's a perfect thing for the media to get behind and create a positive narrative behind this. But they don't, right? They just don't cover it. They'll announce it, they say it, and then, of course, then there's a shoot down following that, all right? They shoot it down somehow. Well, yeah, we hit this 3%, but economists say that's not going to last, right? That's the kind of stuff we hear over and over again, right? It just never ends. Okay, and then we get this U.S. employment cost index. That's going to have it's a little bit of an inflationary measure that comes out later today. Okay, so let's look into the details of what happened yesterday. We had the German 10-year bond auction. We talked about that. Fairly good. No complaints on that. Bank of Canada rate cut 2.5 to 2.25. U.S. pending home sales were flat. Expected at 1.6, came in at 0. Crude oil inventories, quite a big draw, but still not an impact on the crude oil market. We talked about this. This isn't what's driving this market. There's talk of us even creating more ability to extract energy, crude oil out of Alaska, different places, even though the crude oil is the supply situation's already under pressure. Okay, there's already lots of supply. Demand is stable, but there's plenty of supply out there, and we see this, right? In this particular case, this was the drawdown, but it still doesn't have an impact on it's not having much of an impact on the crude oil market. So big draws, big builds, it doesn't seem to have much of an impact. This is why I want to get into what's going on in Israel and Israel's influence throughout that whole Middle East, because I think this is going to, Israel's fighting a war on 7 fronts over there. And we saw them this week spark things up again, blaming, oh, well, we had to strike because of this. Okay. A lot of times I think this is just them retooling, taking a break. And fighting another war on another front, right? And this is to gain control of that region. I think Israel's trying to gain control of that region for a lot of different reasons. Israel's good at taking handouts or stealing from the US and stealing from China, right? They're part of this whole they're in the middle. And that's what goes on in that Middle East region is a lot of proxy wars. It's like China's trying to get the Silk Road through there, the US is trying to have its influence. Who's really controlling all this stuff? Is the real control coming out of Switzerland? Is it coming out of the central banks? Who sits behind the central banks? Who's driving a lot of this behavior? These are the big questions we want to ask, but I think the way to tear into this is to look at Israel and their influence around the region, okay, with Egypt, with Iraq, with Iran, with Syria, and that whole area, okay? And so I think that's more of what's driving these crude oil prices and what the U.S. is doing overall from an extraction perspective, allowing things to open up off the shoreline that Biden and the globalists wouldn't allow to happen. And then we see it happening in Alaska too. So that's what I think is more of the driver. Okay, then we had the U.S. FOMC rate statement, 4.25 down to so 4.25 down to 3.754. Okay, that's where we're at now. And at some point, we'll dig into all these different things, the different rate, the repo rate, all these different components. That's just the headline number. We're at 4 now, right? We were at 4.25, we're at 4, but it's not quite that simple. But generally speaking, that's kind of the headline rate. Bank of Japan held at half, 0.5, 50 basis point. And they look like they're on hold for quite some time. With Sane Takaichi in there, it looks like they're just going to sit still for a while and just kind of ride this. Ishiba, Ueda, the head of the Bank of Japan, seems comfortable just sitting tight for a while, letting the economic policy, seeing what Takaichi is going to do with the economic policy before the Bank of Japan makes any significant moves. I think they're okay sitting tight. The market seems to be accepting it. And so that's that. If the yen starts to get out of control, then they have to do some things, okay? So again, it's going to be currency driven. It's going to be how well their bonds are accepted around the world, how well the debt is being accepted. Those are the things that will force the Bank of Japan to take some action. Right now, I think they're just going to sit back and watch the economic policy and see how successful this Sane Takaichi can be with this, Abenomics type of approach. Okay, and then let's see. Today we've got... we have German preliminary CPI, Spanish CPI, German preliminary GDP. So we're going to get some good reads out of, and again, Christine Lagarde, the head of the European Central Bank, I'm sure that she already has this data. So this is going to be built into her comments. Even though I don't think they're going to do anything today, they're going to see the weakness is there weakness in Spain? Is there weakness in Germany? We know there is. We're seeing it come through. We did see a crazy number come out of France that was unexpectedly good. And this is on the back of that whole turmoil that we've been talking about over the last few weeks. So again, I don't think the markets are buying it. I don't think this European Central Bank's buying it, but that's what it is for now. Okay, so what's going to come out of this? What's going to be the commentary that comes out of the European Central Bank today? All right, and then we get this Italian 10-year bond auction. That'll be interesting to watch to see, is Italy holding up a little bit better than the rest of Europe? And then we get a few speakers out of the FOMC. Remember, we ended that. So after that, we said, watch Jerome Powell. We're going to watch what he had to say here in a second. But yesterday, the concept was they're going to have the rate announcement, and he's going to come out and read the announcement, but it's going to be released. The computers get a hold of it. They parse the data within milliseconds. They then react on it. You get knee-jerk reactions. And then he comes out, does the press conference, takes questions. He was able to reiterate what he said in his statement, and that is that the December is undecided, and they kind of have to say this, and we'll talk about that here in a second. And then what comes next is the FOMC. They come out, and now they're going to start talking. And we see a lot of dissent happening on the FOMC, right? We saw Moran coming out asking for a 50 basis point rate cut. And then we see this other FOMC member, Schmidt, saying should have no rate cuts, right? Inflation's still not in check. So some of these people are looking at jobs. Some of them are looking at inflation. Some of them are looking at the overall economy, trying to anticipate what's going on. But ultimately, I think what's going on here is that Jerome Powell is losing a little bit of the control of the commentary, and they have no data, right? They've been saying for years, we're data dependent, and they have no data. They have plenty of data, okay? The Federal Reserve can get plenty of data. They have 500 economists. They have 12 branches around the country. They can talk to private industry. They can talk to banks. Whenever they make a call, the other side's going to pick up the phone. So they can get plenty of information. They can get plenty of data, okay, on their own. The problem is they don't have the generally released data that they can use in the media to control the narrative. So part of this government shutdown is kind of fascinating to watch. Whether this is intended or this is just a side effect, it's kind of interesting to see this government shutdown and what it's doing to the Federal Reserve. They love to have this general, this government released data, because then the media, the news wires, everyone knows what to do with it, right? They know how to push out this narrative. Right now, the Fed doesn't have that. So they have plenty of data. They know what to do. They just they can't control the narrative. And Jerome Powell's the head narrative controller of the Federal Reserve, and he's now getting Moran descending on one side, Schmidt descending on the other, and he's sort of losing control of the consensus out of the committee. All right. So we'll get to that here in a second. But that kind of wraps things up there. We get Tokyo, we get CPI data out of there. I want to watch that and see again. Sane Takaichi, what are they going to do about inflation? What's the Bank of Japan going to do? That's why we continue to watch that stuff. All right. Okay. Government shutdown day 30. Powell, December, not certain. Okay, let's take a look at this. We've got this clip here. This is Jerome Powell coming out and saying right out of the gate that December is not certain.
There were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Okay. And then here's a little bit longer. This is that was him during his statement, right? Statement gets released. He's reading the statement. And now they're going to go to the questions in the press conference. All right. So here's someone asking. I'm going to run this. It's a little bit longer, I think it's over 2 minutes. But it goes through a couple key things. We'll come back and comment on this. This is kind of interesting. He talks about that, gets a chance to reiterate that, and then goes into a couple other things that we want to talk about.
The investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom. Thank you.
You know, I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. You know, I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, you know, some will be more averse to inflation overruns and some will be more averse to underruns of employment. And so you put that together. And as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here. Is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. Well, what we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice. And so there's not a lot of benefit to be holding on to get the last few dollars because again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Okay, so quite a bit to unpack there. The first thing is, the rate announcement saying that, we're data dependent and we're not going to make any decisions ahead of time. But we've seen them move. Again, if they're not controlling the narrative, then who's going to control the narrative here? It's probably going to be President Trump, Scott Bessent, in the next few weeks as they pick who's going to be head of the Fed. Now, Rick Reeder is a big issue. If Rick Reeder gets in there, I don't know what to think about that. Remember, he was a guy at BlackRock, ran their fixed income bond department. Then he got another role, and then now he's in the mix for running the Federal Reserve. Okay, I'm not sure that I'm a big fan of that. He's obviously a smart guy, but that's a wild card. Okay, because I don't know. We'd have to watch and see. And I'm watching closely. Is he in sort of a quiet period? Because I haven't seen him out speaking. Why is he not out speaking? Why is he not out doing interviews? Because probably he knows he's going to get asked this question and he doesn't know what to say. And he's going to get asked the question, isn't it strange that Larry Fink's running the World Economic Forum now and that you're going to be running the Federal Reserve? Wouldn't that be two BlackRock guys essentially in control of two pretty powerful entities around the world? Okay, and a lot of influence between those two. So that's a really wild card. Now, he talks a lot about the dissent, okay? So you've got this Schmidt on one side saying, inflation, okay? And then you have Moran on the other side hinting at jobs or something coming down the road, a weakening economy, okay? And then you factor in what's going on with China, what's going on. And so then we look at the bond market. What's the 10-year note telling us? The 10-year note is not liking this rate cut. They don't believe the 10-year note. And again, we have to look at different parts of the yield curve, right? They're talking about the short-term market, the repo market, repurchase market. And then you're talking about the 2-year note, the 5-year note, the 10-year note, the 30-year bond. Okay, you got this whole yield curve. And there's different things that go on. Like people are more comfortable taking on short-term debt because it's short-term. There's not a lot of unknowns. Okay, you got 90-day paper, no big deal. You're going to get a certain rate of return. And then you can make a decision after 90 days to roll that again or overnight lending. Okay. And this is the Federal Reserve, is to keep that whole conduit moving efficiently, okay, so that banks aren't afraid to lend to banks. And that's ultimately the backstop here that the Federal Reserve provides, right? Liquidity in case something like that breaks down. We saw that before the COVID crisis in 2019. The repo market went nuts, right? The overnight, the short end of the yield curve went crazy. It totally went up, and the rest of the yield curve sat flat. Because no one was willing to take on any risk. If they don't even know what's going on overnight, are they going to, for sure, not going to look out 30 years and start buying that debt? So the Fed had to come in, the Treasury had to come in, and they had to get that thing squared up again. Okay, and that, to me, that was some sort of a precursor into COVID because it cleared the slate. It allowed them to get money stockpiled. Did ones and zeros. There's really no money there. It's just all digits, right? It's all perception. Okay, so what he's saying here is, the short end of the yield curve is where the Federal Reserve has been able to have an impact. Okay, when you get out to the 10-year note, we look at this and we start saying, okay, 10 years, someone is going to take this debt on. And if they're not going to get, there's two ways to play this. You can look at it in terms of yield, and then you can look at it in terms of delta or change in the market, all right? The movement from one position to another. And are you long that market or are you short that market? Okay, so you can actually just trade the thing with no interest in yield. Okay, a lot of people are going to trade these futures markets and they could care less about the yield. Now, some of the longer term players, they care everything about yield. They're not into being long and short. They just have to have this. They have to have what's called duration, okay, to meet requirements like insurance companies, right? They need to invest in certain things so that they can pay the claims when someone calls in. Someone calls in, they've got so much assets under management. Someone calls in and says, oh, I had a car accident. This needs paid. My house got destroyed in a weather, whatever. The insurance company steps in and pays that, but they have to generate income in the meantime. And that's what they use these debt markets for. They use the corporate bond market. They use the agency market, the municipal debt market, the government debt market, and so forth to create that income to help run the insurance company and do that. Now, insurance companies are generally speaking, they're they're useful monsters, I guess, is the case. There's a lot of nefarious things that go on in insurance companies, and we have to go no further than to look at Warren Buffett and Berkshire Hathaway. The backing of that whole thing has always been insurance, okay? And then they take the proceeds from that and invest it and so forth, right? So, but the point of this is the 10-year note. What's going on? I saw a question in here from Sven. What's going on with the 10-year note? Why isn't it rallying? Well, the markets are getting a little concerned that we can't get lower interest rate. We can't achieve that lower interest rate. Everybody wants it, okay? Moran, well, not everybody wants it. But they got this battle, okay, between inflation and jobs. And then we talk about the jobs. Is this something that the Fed can even control? They can't get inflation under control. They can't get the jobs under control, okay? They may not be able to get the jobs under control. And that's what Jerome Powell was saying in there. We've got these two things and we only have one tool. We can't affect both of them at the same time. So they're in a bad spot. Okay, they haven't been able to bring down inflation, hasn't been effective. And they're not able, and the question is if this AI, right? And let me show you this, right? This is that one of these charts I wanted to show. So this is some of the recent jobs that we've seen dissipating, okay? Companies where we've seen this. Let me clear this off. There we go. So these are some of the companies that have actually been laying off, right? And is the Fed able to, some of this is just, Rivian, right? That some of these are it's just normal course of business, okay? So companies are going to succeed, companies are going to fail, companies are going to grow, companies are going to retract. So some of this is just that. But the question is there more going on here? And is it because of a weakening economy, okay, a weakening global economy? Is this because of immigration, right? We saw all that immigration coming in, and now we're cleaning that up, okay? It's kind of been a quiet story for the last month or two. But probably ICE just continues to take people out constantly, right? That's at least what we think's going on. When that goes on, how does that impact the job market? Okay, then we have the AI. How much of that's impacting things? Like they were talking about Amazon. Amazon 14,000, I think it was, job layoffs at the corporate level. If that's happening, how much of this is AI? We don't know yet. I'm not sure the Fed knows. And if they do know, they're not going to let that out, right? Because then they lose complete control. The Fed's on the verge of losing control of this whole thing. Not only that, with the government shutdown, they always say, right? Jerome Powell, his whole thing has been since the day he came into this chair position, he said, we're going to be transparent, we're going to be data dependent. The problem is they don't have any data now and that they can use as a narrative. They can say, hey, we're getting data from this bank, this branch, this company, whatever, but the system's not set up to transfer that information through it like it is the big data, right? They've got this big machine set up where it's like, okay, out comes the jobs data, out comes the inflation data, out comes this, and they can ride that cycle and they can control that narrative. That narrative's kind of coming to an end. So back to this 10-year note, let's take a look at that because it's a good question. Let's look at this 10-year note quickly. Let me go over here and let's pull this up because we've been watching this thing pretty closely and we've got this. Here's our trend channel, okay? And the concept here is, so this is a daily chart. And we've seen this thing kind of riding this trend channel all the way since back in here, okay? And this is where I'm putting this circle right now. That is October of 2022. Okay, so then we see this trend channel kind of form this long period of time right through here from January of 2020. So since the beginning of this year, okay, all the way through till now, this thing's just been riding the lower end of this trend channel. And we see them coming out, trying to get rates down, okay? Moran, trying to get rates down, right? He was put on this FOMC board. President Trump wants rates down. Jerome Powell says, he's in the middle. They're undecided. They don't know what they're going to do for December. The stock market's not liking this yesterday either. So combination of two things happened yesterday. These bad earnings out of Meta, okay, or this bad outlook on return on investment of all this AI. The market didn't seem to like that very much. And they're not able to get this control of the yield curve, okay, of the 10-year note. And this is sort of in the middle. So if you can't control the middle of the yield curve, can you control the end? Can you control the short end and the long end? And so if this thing starts to break down, we're in some deep trouble because I don't have the chart up anymore, but I need to get this thing so it's quickly to access, but there's a the interest on the debt is our biggest fear, right? We just cracked 38 trillion the other day. This, I think, last week, one day. And so if we don't get interest rates down, then the interest on this debt is going to just spiral out of control. If we start going to 5.5, 6%, and this is a confidence game, okay? This whole thing is about confidence. So if there's some kind of a fear, some kind of an event, anything that kicks this off, and people are like, yeah, I have no interest in buying that long-term debt. This is what starts to spiral into that sovereign debt crisis we've been talking about. Where's this thing going to start? Probably in Japan, maybe in Europe, okay? And then the question is how well can the U.S. protect itself from that, and for how long? Because again, we're talking about $725 trillion in derivatives, we're talking about $38 trillion in debt, we're talking about unfunded liabilities, that are insane, okay, almost not even able to be calculated. That's Social Security, Medicare, Medicaid, all those kind of things, all these promises that are being made, and this all relates back to the debt market. So this is important to me because if we start to break this trend channel, then where are we headed? Down to that white dash line, 111.10, right? That harmonic structure that's been so important. If that can't hold, then we've got some real problems, okay? Because here was the concept with this thing, is that we could see this thing. Let me see if I can find the chart. Here we go. Yeah. So here was the concept, and I know this thing's a little bit messy. Let me just do just a little bit of cleanup on this so we can mark it up again. Up in here, okay, let me just put this rectangle. So up in here, okay, where I just put that purple square, this was essentially the high in this, in the 10-year note. And that was, again, in middle of May of 2020. So middle of 2020. The market gets this big move down, makes a huge exclamation statement that we're done with low interest rates. Higher interest rates are coming. And this is what tips off that debt. All the debt that we hold, it's the interest on that debt that's going to eat us alive, because there's never been an intention to pay back the debt. It's, the goal is to inflate our way out of it, right? Just keep inflation going at 1.8, 2.5, 3.5, whatever percent it is. And that will make the debt look like it's in check with a ratio. Okay. So from a ratio perspective, the problem is 350 million people living in the US, we're not just a ratio. Okay. At some point, people reach the end of the line. Okay. And you can't extend car loans to 84 months, to 96 months, to, 108 months, whatever. At some point, there's only a useful life of a car. And the debt does matter, okay? And the depreciation in that car does matter. So again, you start running people to the end of the line, and there is an end to this thing, right? There is a cliff at the end of this. And so the question is, can President Trump get that GDP up to above 3% and hold it? Because that gives us the growth. Can they get interest rates down and restructure this debt? Can they find somebody out there who's willing to buy this longer term debt that allows us to restructure this debt, okay, and get ourselves off this situation where we're so susceptible to a rise in interest rates? Because if this thing starts to crack, the goal was for this thing to climb its way back into that pink shaded box, okay? That's the goal. Get back up into there over the next couple years into what, 2027, I think this, let me just mark it bigger. So that area is like 2027 to 2029, late 2029. So somewhere in that 2028 to 2030 timeframe. Could we get interest rates up? Could we get the price of this to go up, interest rates to come down, get that 2.5 to 3% rate, refinance the debt? At least the interest on the debt is cut in half. From 5% down to 2.5%, the interest on that debt's cut in half. Now, it's still compounding, so we still have the compounding effect to it. But if we have 5% or 6 or 7% and we have the compounding effect, we're going to have a sovereign debt crisis. Okay, this thing's going to implode. So right now, people are sitting there saying, like, what the heck is going on? Okay, when we go back to this chart, and it's just riding this curve. No one wants to stick their neck out. This market has every reason, or it had every reason until yesterday, okay, to make a move to this 114.20 area up in here where those two green lines are at. And it just can't get there. What can make it get there? Can they jam a 50 basis point rate cut into December and into January? And will that, because if they try to do that and it doesn't drop this market, then it tells you the market is setting the rate and they can't set the rate anymore. Okay, the market always sets the rate, but they need this narrative control. So hopefully that makes sense. Okay, we have this machine in place with the Federal Reserve using data to control the narrative. We have this, this perception out there that we have to control, right? As long as people are confident, right? Confidence stays high, then this, then people will continue to accept, taking longer term loans on cars and homes and things like that to extend out the debt. All right. At some point, though, we reach the end of the line. What's the end of the line? If these interest rates rise and they spiral out of control, and we can't even afford to pay the interest on the debt anymore, and it starts to eat up more and more and more of our revenues, then this is what China, and this goes back into, and then what we'll get into here in a second is we'll look at these clips on China. It just feels to me like Xi has some kind of a preconceived notion that I don't think anybody in the world is in great shape right now. I don't think any economy, any region, anybody's in great shape. And really the US has had to lead this. How much debt? Again, the Middle East they're not big believers in debt. So can they survive in some ways better than the US, who has massive amounts of debt? That's why the stock market's on all-time highs, is because of the debt, right? We just continue to, every time the Fed pumps money in and they fill the system full of liquidity, where's the money have to go? It has to go someplace. So where does it go? It goes into high-performing assets like the stock market. It goes into AI. It goes into whatever the hot thing is, right? Money just flows in there. That's been the success story of the US. The problem is, are we reaching the end of that line where the market just won't accept this stuff? Are we reaching that point? And is the Middle East repositioning for that? Is Asia, is Xi repositioning for that? This is the big tall order that President Trump's had to try to step into, because he was left a train wreck. All right. So hopefully that makes some sense on this. All right. That's a big deal, right? The dollar, what's the dollar doing? What is the debt market doing? And so far today, the dollar, let's just take a look at that while we're at it. We've been watching this dollar. Okay. And I think this is really important. Remember, it cleared that purple line, okay, that purple zone, came back and retested. It was a pretty deep retest the other day, right here, okay, kind of went down below, got a little bit of a retest yesterday, and now look at this thing. We got an energy build, okay, right, so we got the red going inside the white. Let me get rid of that. Okay, there we go. So we've got an energy build, and the dollar's making the progress that we've been talking about. Okay, so can the dollar, there's also a big energy build here. The blue square down, the blue shaded zone down there shows the red going inside the white. So we have energy, right? Markets breathe in, markets breathe out. This market's been going sideways for quite some time. Constant narrative pressure on the dollar to beat it down. Can this dollar start to rally? This is going to cause big problems. This might be remember, who's in more trouble? The US or places like Argentina with all this debt. This is a very complicated situation because we don't really know in the end who is going to be responsible for the debt out of the gate. Ultimately, the whole world's responsible for it. And this is probably why the standoff between President Trump and President Xi, because I think the world sees war is on the front. There's almost no way that these guys don't know how to avoid it, okay? I don't think they know how to avoid it. And that's been the recipe for all the times where we've gotten these situations before, is just go to war, right? The problem is, I think President Trump would like to avoid war. I mean, he's doing everything he can, right? Trying to, put out the flame on all these conflicts around the world, trying to create peace. Is it just an illusion? All right, that's what can happen, because ultimately, if this dollar starts to go higher, it's going to cause other countries, okay, to not be able to pay back this debt. And so, where is this going to show up first? Ultimately, it's going to trickle throughout the whole system, and it can trickle quickly. This isn't like this could be a 5-year process, but it could be a 5-day process as well, right? It could happen very quickly. So, again, debt, 10-year note, watching to see if it breaks this thing. That's not going to be good for the administration, right? What can they do between now and the end of December to try to get rates coming down? And can they jam rate cuts to get us to the point where we can restructure this debt? Okay, this massive amount of debt that we have, a big portion of it. What's the dollar going to do? How much pressure does that put on the rest of the world? Does it put more pressure on places like Argentina? Does it put more pressure on other countries that have to pay things back to the U.S. and can't afford to? And then this is what leads to these debt crises, okay? So this is what I'm saying. Like, this dollar could fail on the upside and catch people on surprise. I think ultimately the dollar is going to fail. I don't know what kind of a time frame. People say it's going to take 30 years to unwind this dollar. Well, that's if things are normal. The problem is, in a very accelerated environment, this dollar can unwind. It could happen very quickly. All right. And maybe that's what they want, or maybe nobody really has any control over anything. That's another possibility. All right. Ultimately, we might be getting to the point, and this goes back to Hoover. When he wrote his memoirs coming out of, the 20s, he wrote his memoirs and he said it was like a cannon on a ship, that was going through rough waters. Nobody knew where the cannon was being fired. We're just firing the cannon left and right. Nobody really knew where it was going, right? What did he say? Like a cannon firing in a tempest sea or something like that was his comments. So things can get out of control. Is that where we're getting to? And could this dollar be the recipient of, or be a catalyst in that whole thing? Could this dollar see that big move up? Okay. We're seeing it come in these currencies, right? That, remember, British pound looks like it can fail. The Australian dollar looks like it can fail. The Canadian dollar doesn't look good. Looks like it can fail. The euro is a total, I'll put the word scam to it. It's been a scam for a long time. The euro is a scam. The yen, look at the yen, what's going to happen with the yen? Again, a lot of this comes down to how can Takaichi manage this in the Bank of Japan. The Swiss franc, I mean, we've talked about that. It's got the most energy in any market I've ever seen built up. The wheat market had a similar amount of energy built up. And the thing, when the Ukraine war kicked off, I mean, it went from $4 a bushel to, I don't know, 10 or 11, 12. So it almost tripled in a very short period of time. This is an even bigger energy build in the Swiss franc. So what I'm saying is, these other currencies could fail and the dollar could actually be the recipient. And it's not good, right? A strong dollar will cause major problems. And, what's the fallout on this? I don't know. I mean, the good and the bad is Scott Bessent is the currency king, okay? He and Stan Druckenmiller with underneath Soros were the ones that took down the British pound. So they understand global currency. The question is this guy on our side or not on our side? And that's why I'm very critical of Scott Bessent. Is he on our side or isn't he on our side? Because if he is, we have the right guy in there. He knows how this stuff works, and he can probably navigate this as well as anyone, right? He's got the brain to do this. The problem is he on our side or is he not on our side? It's very questionable at this point. All right, let's take a look at a couple other charts because we can hit them right now while we're doing this, and then we'll get into some of these clips on China. Let's look at this. So here's the S&P. And it's taking a hit right now. So we had some divergence yesterday, okay? And we knew that we have this white dash line, the full upside objective. And this is our new line in the sand, this 6909. If it stayed above there, the trend is up, okay? And we could see this massive rally into year end, okay? But the problem is right now it's below, okay? And you can see it spent, in my mind, this spent a lot of time. Some people may not agree, but I think that there was a lot of volume that took place yesterday around this 6909. We saw this big spike up last night. What time was this? It was like 9:30, 10 o'clock East Coast time. We saw this big spike to take out this prior high. That's always a red flag. We didn't have divergence on this one. Let's see if we had it on this. Yeah, it looks like we probably had, no, I wouldn't say so. Anyway. But there's a big energy build on this longer time frame. You can see that right there, okay? Then we go to this. So let's go back to this. Let's go ahead and, so that's 6909. We're below that 6909 right now, okay? Let's take a look at the Dow. The Dow, we had this level at 47,797. So basically 47,800. If it stayed above that 47,800, okay, and it started to make that move, it had the potential to make a run at this big psychological level, this 50,000. And it's still not completely saying that it can't. But right now, things have shifted in the last day. This whole thing with China, the earnings, the Fed, all these central banks meeting, okay, we knew that we were coming to a significant point in time, okay, end of October, 1st of November. And the question is, are these markets, we had big divergence yesterday in the Dow, okay, so, the first thing we would want to see, and that would basically taken place right up in this area. So the first thing we would want to see is what? Back to this Elliott wave, okay? What we're looking for is this, right? Some kind of confirmation, okay? Let me see. Let me put that underneath me. There we go. Okay, so it's the one, we're looking for that first wave down, some kind of a consolidation, and then a break of that number one, okay? We haven't seen that yet. We've seen the push down on a Friday, a couple Fridays ago, then we saw consolidation. We saw another push down, starting from scratch, we pushed down again. Consolidation, didn't break, went to new highs. Are we going to see that here where we see some kind of a push down, some kind of a consolidation, and then we actually break from 0.2 to 0.3, all right? That's what we're watching for. Now, we had the divergence in this Dow, okay? We're breaking below this 47,797. This is a first sign that this thing is getting weak. There's some weakness here. Okay, we had the divergence. The next thing would be breaking the 47,797, the full upside harmonic. Okay, again, I think it's pretty clear, at least it's clear to me, okay, that the Dow spent some time here yesterday around that 47,797. Okay. Lots of chop back and forth across there. And you can see it was basically trading between the 7/8 and the full upside objective. It was going above the full upside objective, but you can see all these reactions in here, okay, to this level. And we're breaking down below this 7/8 this morning. Okay, so nothing substantial yet, okay, nothing to, I would say, panic over, other than the fact that these currencies are getting hammered this morning, right? You know, the British pound's getting hammered, the euro's getting hammered, Swiss franc's getting hammered. Okay, the Canadian dollar is getting hammered. Those are the bigger concerns to me on the currency side. Okay, the debt market potentially breaking this trend channel. That's another red flag. All right, the stock market potentially starting to roll over here. We're rolling into this weekend when we've got all these the end of the employment. What is it? We've got the issues with the healthcare enrollment. It's coming due, right? Part of this government shutdown. We've got potentially, the food stamps going offline. Are the markets kind of anticipating some of that stuff? We've got more earnings coming out of, this week, big tech earnings. Today we get Apple and Amazon tonight. And then we go into another Friday. Okay, what happens again? The fourth Friday in a row since this whole thing kicked off. And I found some more stuff out on that first Friday, which we need to go into tomorrow. I think this is really important. This guy that started Binance out of China, and President Trump gave him a pardon. Not going to be a pretty story to tell, but we got to tell it. So tomorrow I want to do that on this CZ, right? Shang Xiaopeng or something like that. So we want to talk about that tomorrow, but just too much for today. So right now, look, I mean, if what we have are these lines in the sand, the 47,797 in the Dow, 6909 in the S&P, if those start to give way, what are we going to look to? The 6547, right? That old level in the S&P, okay, down in here. Let me see if I still have that. I don't know if I do or not. Yeah, here it is. The 6574. Okay, so you can see we're a long ways away from that, right? We just started to break the 6909. Let me mark that. So here's the 6909. It's not exact, but it's pretty close. All right. Okay, so there's the 6909. So you can see we're just barely poking below it. So again, nothing to get majorly alarmed about, but the 6574 would start to tell us this thing's really breaking down. At that point, we would probably see something like, what's in that little chart below me, the Elliott wave breakdown, something going from 0.2 to 0.3. All right, down to 1, consolidation, down to 2 to 3. That's what we're watching for, any kind of a breakdown. If this stuff finds a way today, earnings come out great tonight at Apple and Amazon. I mean, this thing can get a breath of life quickly. All right. So, but we have these levels that we're watching. Yesterday, we saw a lot of volume trade around them. So it tells me they're important. All right. We've seen it get checked into those levels a couple times. We have good structure. We're watching the Dow. We're watching the S&P and so forth. Okay. I think that covers it. Again, Russell's not participating. Here's the Russell 2000. It's above, it's on all-time highs, but it just can't get up and go. Okay, this is what we would love to see. This is the green shoots, right? The small to medium-sized business and people anticipating this really good flow back into the U.S., foreign direct investment going into these green shoot companies that are supporting a future economy that's going to grow a lot, right? We're just not really seeing that thing take off. And I think we did the Dow, and then the NASDAQ still looks pretty good. I mean, this thing hangs in there pretty, and I wouldn't really say this is one to watch. But we know we got this, 24,126, I think it was, something like that. I don't know if I still have that on here or not. Well, we'll take a look at that tomorrow. Yeah, here it is, 24,165. This is the one that fills in. So you can see we're still a long ways away above that 24,165. That was that monthly harmonic structure. It was like a 13% move up. We had the Liberation Day, then the market went up, then we got a harmonic structure, gave us this target at 24,165. It got there. We had the contract roll September, December, right? Not to rehash all that stuff, but the point is it was an important level, okay? And I think we're a long ways away from that in this NASDAQ. So I would say nothing to be alarmed about, but it's the beginning of something not right. Okay, we're seeing these levels break down. Okay, so currencies, big issue. Debt market, second biggest issue. Third biggest issue is the Dow and the S&P starting to break down. Are we going to see more of that breakdown? If we do, we could find ourselves in a pretty tumultuous period of time in the near future. That being said, right now we're right at the beginning of this, and it's too hard to make that kind of a call to say for sure of anything. All right, let's look at this. Let's take a look at the soybeans. Wow, I was kind of looking to hope to pick that up today. All right, so we almost came in. I thought we were going to get a retest of this pink zone. It started to sell off overnight. Not super excitement out of what happened with President Trump and President Xi. Very stoic conversation, very stoic faces, I think, out of both of them. President Trump was trying to make it more cordial than what I think it really was. Xi was stone cold. I mean, he looked like he had a stone cold face. He's probably not real happy with what Trump's doing in South America. This is a very interesting situation right now. All right, so we'll watch those clips here in a second. But I was hoping we'd get a retest of this pink shaded zone in the soybeans because I wanted to pick some up. It was looking good this morning. And then, boom, we get a new reversal to highs. And I'm not seeing any divergence there yet. So we'll have to watch and see what goes on with that one. Okay, let me go down here. What else did I want to cover? Oh, yeah, crude oil. Let's take one quick look at that. Okay, crude oil. So again, 63.18. It's not getting up there, okay? No matter what. Builds, draws in the inventories, doesn't really matter. I think what Israel's doing with Egypt and so forth, I think that's having a huge impact. I think it's going to impact the Saudis. The Saudis are playing tricks over there too on Israel. There's a lot of under the surface, what's the right word? Chicanery going on between these guys. And this is what we want to uncover. I think this is going to be important, okay? What's really going on? Then we can get a grip on what's really going on with Israel, what's really going on with the Saudis, what's really going on in that whole region. It's going to be important, right? We've got the Asian region. It's starting to shape up into these three regions, really. The West, the Middle East, and the East. And no surprise, right? I guess it sort of, fits. But I think it's probably becoming more definitive than ever. And if we are heading into some sort of a global war, we're going to continue to see these boundaries, right? These teams, sides being chosen. And so it's in some ways, if you think about it, it's part of the evolution of leading to that, all right? And I just think with all this debt, like, I don't know if these guys know how to get out of this without it. I think President Trump, I feels to me like he wants to try to get out of this and not lead to a war, try to calm tensions down. But again, some of these things you might not be able to stop them, right? This is excesses that we've built for 60 years, right? Debt, built on debt, and you might not be able to stop it, okay? Okay, and then, so that's that. Let's go ahead and run some of these clips. I want to dive into this, let you guys see what you think about this in terms of, and I'm sure this is going to be out and about today, but we can talk about it from a market perspective in here. All right, so let's do this. So this is President Trump when he gets there, okay, with G. And just kind of watch the facial. There's not a lot of words here. There's a little bit of words, a little bit of translation. I'm more interested in their facial gestures and how comfortable they feel with each other, right? These are the two big leaders of the world, of course. And just kind of get a feel if you feel like if this is a friendly environment.
The President of the People's Republic of China.
Good to meet you. Great pleasure to see you again.
Good to see you again.
很高兴再见到你。Me too.
And we're going to have a very successful meeting, I have no doubt.
我肯定我们今天会有非常成功的会议。
But he's a very tough negotiator. That's not good.
但是他是很强硬的谈判者哦，这不好。
We know each other well.
我们相互之间非常了解。
Mr. President, do you plan to sign a trade deal today?
Could be.
有可能，
I think we'll have a great understanding.
但是我们会达成很好的
We
理
have a
解。
great relationship. We've always had a great relationship.
我们之间的关系很好，关系总是很好。
我们之间的关系。
那问他是不是还在会买美国的大众？
Will you discuss Taiwan with her?
他们在下面问题。
Which way?
Right, one second, thank you.
Thank you very much, everybody. Please.
Okay, so clearly the camera was focused on President Trump. President Xi was getting cut out of some of that, but it just didn't feel very, it was like, okay, here we are going through the motions. Here's the next one where they're actually sitting at the table. This is how they always set them up, against their counterparts. So, you'll see President Trump and Xi across from each other, and then you'll see Basan across from his counterpart and so forth.
And it
Who's in
feels
the
very
room?
warm seeing you again because it's been many years. Since your re-election, we have spoken on the phone 3 times, exchanged several letters, and stayed in close contact. And our joint guidance, China-US relations have remained stable on the whole. Given our different national conditions, we do not always see eye to eye with each other. And it is normal for the 2 leading economies of the world to have frictions now and then. And in the face of winds, waves, and challenges, you and I, at the helm of China-US relations, should stay the right course and ensure the steady sailing forward of the giant ship of China-US relations. I always believe that China's development goes hand in hand with your vision to make America great again. Our 2 countries are fully able to help each other succeed and prosper together. Over the years, I have stated in public many times that China and the United States should be partners and friends. This is what history has taught us and what reality demands. A few days ago, in the latest round of consultation, our 2 economic and trade teams reached basic consensus on addressing our respective major concerns and made encouraging progress.
Okay, so the words there are good. Okay, it's like, sounds good. We should be friends. We should work together. But it just doesn't feel like that's what's going on. Again, the big talks here were the soybeans. President Trump got that. We'll take a look at that here in a second. There's even talk of energy. Okay. Chris Wright, Department of Energy, was out speaking this morning, and I have to go back and watch it to get all the details on it. I can only catch part of it, but he was saying, that we are going to provide energy to China. The problem is China doesn't really need that energy. I mean, they sort of stole access to the Sangpao River, okay, from India. That was a major issue of contest, but it very contested. But I don't really think China, again, they need the crude oil. They probably need the natural gas. The question is, do they, they have a lot of energy from electricity perspective. Now, they also have a lot of people. So, and again, we don't get great data out of there, so we don't know for sure. They're also not afraid to put up nuclear reactors. They've been building nuclear reactors. It's just, this is a weird thing, and we'll see that in one of these things. I want to go through that quickly. Okay, but here they are on the way out, and this just doesn't feel friendly to me. I think this thing was supposed to take 3 hours, and I thought I heard it only took 1 hour and 40 minutes. They didn't get to the Blackwell chips between the H20s and the NVIDIA chips, the H20s and the Blackwells. To me, that's like, that seems like odd, right? That's they've bought some time, right? They pushed this out for a year. I think part of what's going to happen here is supposedly this mineral, the rare earth minerals is going to flow freely. We'll see. Okay. What if in a week or 2, Xi all of a sudden starts doing what he did before, where he's like, yeah, we're just not going to fill out those forms. We're not going to move this stuff. The markets are again, the currencies are starting to tell us something's not right here. The debt market's telling us, it's giving us red flags right now. And I just don't think this meeting went as well as everyone hoped. Remember, it started off, it was very easy out of the gate. Okay. And then, so here they are on the way out the door. See what your read is on this.
President Trump coming out. Let's just listen here for a second and see what's happening.
just doesn't have a good vibe to me. Something doesn't seem right there, okay? It doesn't seem like these guys really bridged any differences. And so that's what we're going to watch. The markets are saying they kind of agree with that right now, I think. Currencies, debt, stocks. Let's see what happens over the next day or two. See what comes out. Again, Besant's going to be out talking about it. Rubio will be talking about it. Lutnick will be out talking about it. I'm sure they're all going to have their, throw their 2 cents into how the thing went. President Trump was clearly trying to spin that. Okay. I thought at the beginning, he was trying to spin that. G didn't seem to really want to deal with it. There were things that didn't get talked about, and then weird things that got talked about that don't seem to make a lot of sense. So something's just not right here to me. And I think, here's another thing to consider is that, if we, how do I put this? I think Taiwan's is in both of their minds. And this is probably going to escalate over the next year to 2 years. So how long are these soybean deals going to hold up? And what's going to happen with these Blackwell chips? What's going to happen with, all these different things? So these are the big points that were contested. Let me just throw this up there. And so these were the big things that they were going to be talking about, right? The shipping levies, soybean purchases, the fentanyl. How many times have we been through this fentanyl thing? I mean, I thought we addressed this in Trump 1.0, but it didn't stop. This is my point, right? It just didn't stop. Then we have the rare earth minerals. Supposedly that's been fixed. And I thought this TikTok deal was sort of done, right? We talked about that. Larry Ellison, Oracle, basically got control of it with a couple private equity firms, Andreessen Horowitz, Silver Lake, Rupert Murdoch was in on the Murdoch family's in on the whole thing, okay? And then ByteDance, the Chinese entity that gave up 80% to the U.S., they were going to retain 20%. We don't know what the monetary component of that was, but I thought this thing was locked down, and yet here it is showing up again, right? And actually, I think it came up in conversation. So to me, it just feels like going round and round and round and round, right? And I'm not sure that there's a lot of progress being made here. Okay, we'll see what happens on the soybean front. We'll see what happens on all these other things. Okay, and then there was one of President Trump getting on the plane headed home. I'll just skip that because we're running short on time. And then I think that covers most of it. So we're looking at this from an economic context. Transferring, the ending. We've been transferring huge sums of wealth to China, okay, because of this unfair trade. That's what President Trump's been banging on, that concept, for a long time, okay? We also now have the security context. What's going on in this Asian rim, right? The unspoken defense part of this, okay? We had that creepy clip of President Trump, I think a day or two ago, when he was sitting at the table with the Japanese, and he was saying, anything you need, right? Thank you for buying our defense. We've got your back, okay? To me, this is that's as far as they were going to go on the unspoken part of this from a defense perspective, right? And then the fentanyl, again, it almost, are they really ever going to shut this down? Is there really ever any intention of China? Now, this goes back to, what was it, the 1400s, when the British Empire was jamming opium up the channels of the China's harbor, and at that time, the Chinese ruler wrote a letter to England and said, please stop sending this opium. You're destroying our country. Is this what China is essentially doing with the fentanyl to us, right? They know that if you want to destroy and control, remember that, Hong Kong got rule of England, that was ruled by England for a long time. It just got turned over around 2000. So China's well aware of this, the history of how drugs were used to destroy their economy. Because remember, if you look back through time, China was a very strong economy for long periods of time, okay? And then it got decimated, probably mostly by the British, right? A big part of it. Is that what they're doing here with the fentanyl? They're not going to stop, okay? They're just going to keep jamming it in until, they impact our economy and other economies with this stuff. I don't know, but that's what it seems like, okay? And then, all right, I think that covers most of that stuff. Yeah, and then, we'll save this on the sovereign wealth fund. Yeah, I'll save that because that's going to be a little too much. All right, let's see. I think that's good. Oh, and then I did want to talk real quickly about this. Okay, this will tie back into the AI stuff. So we had earnings out, and this might be what's impacting some of the stocks as well. Is that yesterday we had earnings coming out of Microsoft, Google, and Meta. right? And then tonight is Amazon, Apple. The Zuckerberg was out. Okay, the the he he was out talking about this. Okay, their three forms of revenues are advertising, commerce, and subscription. Okay, they've got those three forms of revenue. They didn't. He talked about those pretty extensively, but he didn't mention the AI generating a lot of revenue. Okay, and he doesn't believe that it can. Does he not believe that it can generate much revenue, or is he just so far behind? And again, all that acquisition of talent, paying big money for that acquisition of talent. He's the one that's hiring all these AI experts to come in for the hundreds of millions, maybe even billions of dollars. Okay, and so this is that go for broke mentality. I think the we just have to stay tuned to what's going on here. Okay. And is there some sort of are winners and losers already being chosen is the big thing. Microsoft's working to develop this intelligent cloud. Okay. We talked a little about at the beginning where one, generating more revenues off the usage of space. Two, the information in the cloud and their ability to feed their large language models and their AI engines by putting more stuff in the cloud. And they're making it very difficult to avoid their cloud. If you're on a Microsoft product, they're doing everything they can. Somehow they've written something in there that when you go to save, it immediately tries to push you to their cloud. So it's a very devious thing. Again, we're losing. They've stolen our rights. I mean, we should have to choose. But they're almost making it the default is everything goes to the cloud, and that has to raise red flags. I've been seeing this for a couple months, and then when you see the actual numbers come through on the cloud, you can see that it's actually working. People are actually doing it. Okay, it must be. Okay, and so Meta was down, I think, $50 to $60 in the pre-market, about 8%, because they couldn't give definition as to how this AI was going to generate revenues. All right, Microsoft was down, I think, $17, $18, over 3% in the pre-market. Google was up $20 to $21 in the pre-market, about 7 to 8%. So Microsoft and Google called out being supply constrained. Okay, so again, a lot of this is, can they get chips? Okay, this is going to be the excuse that they use. They're having a hard time getting the chips. This goes back to Taiwan. Taiwan semi, there's not enough to go around. NVIDIA needs to make more, right? That whole kind of a thing. And NVIDIA, by the way, just cracked, I think it was $5 trillion. So the first company ever to crack $5 trillion in market cap. So again, NVIDIA is doing everything it can. It can't grow any faster. I mean, they've gone from almost a tiny little company to the biggest company in the world of all time, very quickly. And when these landmarks kind of get hit with these big companies, a lot of times it marks tops, so I've seen this many times. Okay. Not saying it's going to happen here, but it's just peculiar that happened. They just cracked the $5 trillion. Maybe they're headed to $10 trillion. We don't know. But the point is, a lot of these companies are saying they're supply constrained. They don't have enough chips coming in to feed this. Although we talked about this, $78 billion spent in the last quarter, just out of the Mag 7 on this tech space, with the idea of spending. We hear numbers of $1 trillion, $3 trillion, $6 trillion. I've even heard numbers of $7 trillion, which is just crazy. That's kind of like, when they say, we saw what happened with gold, right? We get this massive run up and then we get a 10% sell off. Are we going to see something like that in this tech sector? The problem is, can we handle something like that? The gold's gold, it's real. It's just a matter of what's the fair price for it. Some of this tech space, like, we don't know how much of this is real, again, because a lot of this is driven by debt, right? All this debt that we've run up has fed this market because the money's got to go somewhere. Where does it go? It goes into money. It goes into the market. Goes into ideas. Are the ideas big enough to account for the amount of money that's coming in there? All right. Can the ideas outperform the amount of debt? I guess is the big thing. Can we outpace the debt that we are creating with good ideas? And how long can we keep this thing going, right? With this innovation, right? That's kind of the thing we're up against. All right. So I think we covered all that stuff on OpenAI is also going to be filing, to go for an IPO in 2026. So it's probably going to come early in 2026. They're looking for a $1 trillion valuation. We talked about that. Largest private company a couple weeks ago at $500 billion. Immediately, they're all talking about doubling their value when they go public. So that's a bubble, right? On the private side, it's estimated at $500 billion in value. When it goes public, they're expecting it to be worth $1 trillion. Okay. And that's within a 6-month period of time. So doubling the value of your company in that short period of time just because you went private to public. Remember, we talked about at the beginning, the private to public, private debt, public debt, public equities, public investment, private investment. Okay. The private equity side, the public equity side. Okay. I think that's pretty much all I wanted to cover. It's a lot of stuff. I think the big takeaways today are a lot of things were coming together. The FOMC, okay, all these central banks meeting, Jerome Powell potentially losing control of the narrative. Did the meeting between, and I did want to show this real quickly. Let's go through this. I think let's look at that. I just want to show this. This will take just a second. Is that coming through okay? All right, here we go. Okay. So U.S. trade balance with top 5 partners. You can see, Mexico, Canada, China, Germany, Japan. We run deficits with all of them. China's obviously the biggest. That's no surprise to us. We've been watching that. And then here's the thing I really want to look at too. This is President Trump's statement. Is pretty much right when I don't know if it was right away, but it was shortly after the meeting was over, probably when he was on the airplane. But he talks about here, the purchase of oil and gas from the great state of Alaska. He says he had a great meeting with President Xi of China, enormous amount of respect between the two countries. Again, I think President Trump's trying to do a sales job here. I just don't feel like that looked to me like on the faces of these guys that they really, that there was a lot of respect being shown. Respect isn't the word that I would use, concern, I would say they have a lot of concern for each other versus a lot of respect for each other, okay? China to begin purchase of massive amounts of soybeans, sorghum, and other farm products. Farmers will be very happy. President Trump says farmers should immediately go out and buy more land and large tractors, again, trying to stimulate the economy. I would like to thank Xi for this. The question is, are they going to live up to this? We already had the deal struck in Trump 1.0, and as soon as COVID came along, they didn't live up to any of the agreement. Okay, just like fentanyl, didn't live up to it. I thought we already had that whole thing struck. So here we say China. Here he also says China also agreed they will begin the process of purchasing American energy. In fact, a very large-scale transaction may take place concerning the purchase of oil and gas from the great state of Alaska. Chris Wright, Doug Burgum, and our respective energy teams will be meeting to see if such an energy deal can be worked out. Okay, so that's the other big takeaway. How successful was this meeting? That was the big deal out of this Asian tour. We know Japan's nothing new, okay, and they reiterated certain things. The $550 billion blank check from Japan to the U.S. foreign direct investment. That was already announced a long time ago, but they brought it back up and acted like it was something new. Everything with Malaysia, Cambodia, Thailand, that whole region. Okay, great. There were some rare earth minerals, rare earth metals deals that were done. Australia, the mining of the rare earth metals. What side does Australia fall on? Those were some of the big questions that came out of this for sure, right? That was part of the thing. But the big deal was a meeting with Xi, and I'm not sure that it went that well. Again, they didn't cover all the topics. I think it was shorter than it was expected. And I just didn't get a good read from the look on both of their faces. I thought President Trump was trying to sell the deal, that it was a good meeting. And, again, it should be the opposite in some. Well, I guess neither of them were on home ground. Okay. They were both on neutral territory, South Korea, to some degree. I think it's probably less, South Korea leans more Western for sure. Definitely more toward the United States than it does China, even though it's in that region. So that's the takeaway for me is, did we really feel like this was a good meeting? And we're going to see the fallout over the coming days. And I think the markets will interpret that for us. We'll watch the currency markets, the debt markets, and the equity markets to see what comes out of this. And tomorrow, we'll pick up on the commodity stuff. There's plenty to talk about there. And try to wrap this week up. Let's see what the fallout is today. We'll come back, look at all these different markets, and look at gold and silver as well. I haven't even looked at gold this morning. But and that's been a great trading market of late. So, and silver, we need to look at that stuff as well. We might be getting to the point where if people are looking for a deal on these metals, this might be the time. Okay. And so what would be some products we could look at? What would make the most sense? We've got the miners, we've got we've got the whole chain, right? Where do we go on this, on the metals perspective? Okay. And do we just buy the straight up metals? All right. With that, it's a lot of stuff for today. Hope everyone has a blessed day. and we'll see what happens with these markets. We're definitely at a pivotal point. Let's see what comes out of all this stuff. All right, and then this one's for Trumpet. This is the Rocky theme, and she was requesting. So this one's for you, Trumpet.
Hey, go get Rocky!